Hello, everyone. It is time for my mini series of tax planning. So, this is the second part of 8 ways for small business owners to still lower their 2024 taxes, part 2. In the previous session, we talked about it is about time for you to sit down with your CPA or your financial advisors to talk about your tax. If you don't talk about your tax, you will end up paying a lot that you don't even know. So it is also time to review your estimate tax. So if you're underpaid and you want to avoid that penalty by paying it up. And another thing is to look at your business entity. So how you set up your entity will affect how you pay your taxes. And I also talk about different type of entities: C Corp, S Corp, LLC, pass-through, and LLC partnership. So I also talk about the advantage and disadvantage of a C Corp. So you can review part 1 when you have time. So this section, we're going to continue on point 4, number 4. We're going to talk about a little bit about the DB plan. We also call it cash balance plan. In this plan, it is a great way for small business owner to save before tax over tens and thousands of dollars. So number 5 tips. We talk about home office. A lot of people are saying, hey, is it home office is my biggest business deduction? It's probably yes or probably no. So home office, there are 2 ways to calculate the home office. One is the standard home office deduction. You can get up to about $1,500 per year for the business space that you use as a home office. Another way is the long way. It is the home office actual deduction. There will be direct home office expense and indirect home office expense. This is pretty complicated. And one thing you should keep it in mind, once you use one method to deduct your home office expense, you cannot switch back and forth. So the second way, the direct and indirect home office expense requires a lot of bookkeeping. So we'll talk about bookkeeping. If you ignore your bookkeeping, you'll probably end up paying a lot of taxes. Now is the time for you to sit down and take a look at your bookkeeping. And did you forget something? Or did you double book or make some mistake? So this is the time to review your bookkeeping. And at the same time, and when you want to put down money for a big purchase, a lot of people maybe at the end of the year, they'll think about, okay, is this time that I'm putting money for a big truck because I will get the business deduction. It is a yes, but at the same time, it is no, because you really have to sit down with your CPA to evaluate if your income next year is going to be higher or lower than this year. If your income is expecting growing a lot next year, so you better postpone the purchase. Otherwise, you are going to end up paying a lot of taxes next year. So another thing is, this is the last one, it is proactively tax planning. So tax planning is not a one-time deal at the end of the year. I know a lot of the business owner, they don't even do the tax planning. So here again, tax planning is not a one-time deal. It's a continuous process. And tax planning can be short-term planning and can be long-term planning. Long-term planning requires more systematic evaluating what is your goal, what is your investment goal, what is your business goal, and then we can implement some of the strategy for long-term purpose, and you're going to save a lot of taxes. So I'm concluding this series. My name is Diana Yang. I'm CPA Investment Advisor Representative, and here's my email. And if you have any questions, you can shoot me an email. Have a good evening.